Hurun Report, established 20 years ago by a British accountant, Rupert Hoogworth, has today taken shape of a global authority that tracks wealth creation of individuals and value creation of companies. And today, I'm happy to introduce Mr. Anas Rahman Junaid, the founder and chief researcher of Hurun India. Post his stint at Oxford, Anas began his Hurun journey in 2011 when he decided to bring Hurun Report back with him to India. And during the course of the last 11 years since the inception of Hurun India, Anas has emerged as the spokesperson for Indian wealth creation. He's also an angel investor, and he was one among the 35 individuals awarded Warrior of Change by the Governor of Maharashtra for impactful non-healthcare work during the COVID-19. And recently, he was felicitated as among the 40 under 40 achievers of 2023 by Fortune India. To shed more light on the significance of today's list and its findings, I am pleased to introduce to you Mr. Anas Rahman Junaid, founder and chief researcher of Hurun India. Over to you, Anas.
Thank you, Shobhita. Thank you, everyone. Very good afternoon to all of you. I want to start today's session by sharing a story which I've never told before in a public audience. It's basically my story. So in 2011, 2012, I was working in London with the FSA, which is the RBI for UK, part of the team that split FSA into FCA and PRA. So when I stumbled upon the opportunity of Hurun India, I found it very exciting to speak about the Indian growth story. What I had in my mind was an economist map which said India and China used to have some 80% of global GDP 200 years back, and then because of all the events that happened in that 200 to 50 years, India is back to very low when it comes to GDP. And I really thought at that time I believed that the next 10, 20 years is when India is going to really take back its share of GDP. Now, that was the kind of passion that I had in my mind. I have no background in entrepreneurship. My family is fully professionals. My dad is a doctor, so I didn't really have anyone to look up to or ask for mentorship. But I took a punt and I just jumped in, quit my job in London, came back to India. And it is a tough journey. Building a business in general is tough, and also in a market like India is tough, and also building something which you have never done before. I was just passionate about valuation and also knowing people, but then creating a business out of it's extremely tough. And as Elon Musk said in one interview, an entrepreneurship is like staring into an abyss and eating glass, right? So as an entrepreneur, you get it. Staring at an abyss would mean you basically know that almost 90 to 95% startups fail, right? So every day or every other hour, you really are thinking about how do you make yourself relevant, which is valuable for the society, and how do you build a sustainable business. And you're eating glass. You, as an entrepreneur, you always face, you get to see all the sort of problems. There are good problems, bad problems, worse problems. And as a founder, you take the worst problems and try and handle it yourself. So you are literally staring at the abyss and eating glass. And I really believe the breed of entrepreneurs that we're going to speak about today would come into that category of individuals or citizens of the country who has a very high pain threshold, starting business on their own. And today is dedicated to self-paid entrepreneurship in the country. And I welcome all of you to the very first inaugural edition of IDFC First, Hurun Top 200 Self-Paid Entrepreneurs in the Millennia. About the list, it's a list of about 405 entrepreneurs, about 200 companies they represent, and the valuations of the companies as of 30th September 2023. The cutoff to enter the top 200 is about 3,000 crores, and that's basically the summary of the list. I'll also take you through some of the data that we have here. So if you look at the top 10, which is here, you could see some of the names are very common, but one interesting aspect here is that when you compare the Hurun India rich list and the top 10 here, the only one person who's featured in the top 10 in the rich list is Mr. Damani. And so this is basically the top 10. And you can also see that most of the entrepreneurs in the top 10 in today's list is basically from the startup ecosystem. So that's the top 10 table. And the women representation is also very interesting. If you look here, we've got Falguni Nair to Ghazal Alag, and some of the top women startup founders who've entered the list. So this is very much different when it compares to the data of the Hurun India rich list. So basically you would realize that there is this amazing wave of women entrepreneurship or women entrepreneurs who've really started the business after the year 2000 and gone on to become some of the most valuable companies in the country. So that's the top 10 of the women. This is actually quite interesting. If you look at the top cities in other lists that we produce, it's basically Mumbai is the top wealth creating city in India. But in the IDFC First Hurun list, Bangalore is the number one city, followed by Mumbai and Gurugram. And another interesting aspect is that in all these 5 cities, it's basically the startups dominate wealth creation. If you look at the self-made entrepreneurs of the Millennia list. Just to give you some perspective, in the other rich list that we produce, it's usually the manufacturing that dominates, but here it's startups. So it's quite evident about how Indian economy is moving and how much of an impact the startups are creating in terms of value creation for the country. This is interesting. How many of these companies, have gone global? Mind you, these are companies that are just 22 to 23 years old, right? So there are various ranges. For example, there are companies ranging from 1 to 20 to some companies that are there in more than 100 countries. And there are also certain SaaS companies which are built in India and shipped to the world as well. We did an analysis of the funding ecosystem as well, and what we've understood is almost 95% of the companies in the list have been funded by external investors. So this also kind of throws light into around how much the capital providers have played in terms of creating a viable value creation economy, value creation in the economy, and about 5% are bootstrapped. And 20 of these companies are run by professional managers. So that also kind of shows the maturity of some of these companies in the list, right? So you have a founder who's passionate, who's building a business, who's possibly young as well. And 20 of these companies are run by professional CEOs. And Indian wealth engine, if you look at it in the next 10, 20 years, that you could expect wealth creation to happen from 4 sort of wider engine. The first is, of course, the traditional family business. Second is your tech startup, innovative business. That is what most of this entrance in the list is. Then you've got the professional managers who are the CEOs of companies like D-Mart. Those set of people are going to create value. Then also you have the last category, but it's also the capital providers who provide money to these companies. So and it's quite interesting that 20 of these companies are run by professional CEOs who are not the founders of the business. There is also evidence that value creation has been driven by technology. If you look at this graph, B2C is about 80%, B2B is 20%, but what is more interesting is service is 79%, and physical is 21%. That is, SaaS and tech and those kind of opportunities constitute about 80% of the list. And again, 80% is manufacturing and 20% is 20% is manufacturing and 80% non-manufacturing. This is very interesting. We also did an analysis on the percentage of graduates versus postgraduates. Almost 34% of the list is just graduates. They haven't taken a postgraduate degree, and almost 52% are postgraduates. We also try to understand what do they study. We found that almost 10 founders are chartered accountants, 7 are doctors, and 225 of them are engineers. The top 5 sectors are financial services, retail, healthcare, software, and transportation. I think this is also very much in difference compared to the other list that we put, wherein the manufacturing sectors contributed the top category of value creators. There are also about 133 entrepreneurs on the list are serial entrepreneurs, which means they've found more than one businesses during their lifetime. About 4 have cashed out and 10 have entered the business and then exited. We also did an analysis on the age of these individuals. The youngest in the list is Kaivalya Vora, the oldest is Ashok Suta, the median age is around 43, the youngest woman is Gaslala Soumya Singh Rathod, 35 years old. The average age of the list is about 44. And we also did a comparison on how many of them are unicorns, gazelles and cheetahs. So gazelles and cheetahs are basically those startups that could potentially become unicorn in the next 5-6 years. And cheetahs are worth about 200 million US and gazelles are about 500 million US. So that's the breakup. So that's the brief data. You have the data with you. But what am I trying to tell you here? What I have understood while we finished the research is that this breed of entrepreneurs or this breed of this wave of wealth creation is coming from new industries, new sectors, based on the new infrastructure ecosystem that we have in India. And what I've seen in this breed of entrepreneurs is that a lot of clarity in terms of how they give back to society, either by way of investing back into the ecosystem, but also by way of philanthropy. So because of which I really think this bunch of entrepreneurs who featured in this year, the first edition of the list is actually quite important, and they would possibly be one of the biggest contributors to either by investing or by philanthropy in the long-term horizon, 10-20 years. And I'm very happy to have partnered with IDFC First, and IDFC First is founded by one entrepreneur called by an entrepreneur, Mr. Vaidyanathan, who would have featured in the list if they had not been the partner, and was truly an inspiration for any entrepreneur who wants to set up their business in India in terms of how he has built his business. And really, it gives a lot of meaning to have a partnership with IDFC First in launching this, the self-made entrepreneurs of the Millennia list. And this is all I have to say. Thank you very much for your time. I'm here to take any questions. And thank you very much for joining us. Thank you.
Thank you, Mr. Anas. In partnership with Hurun India, IDFC First Private Banking celebrates diversity and dynamism of India's entrepreneurial ecosystem. Today, we are honored to have with us a leader who heads wealth management and private banking at IDFC First Bank. He has been involved in successfully launching and growing businesses by way of demonstrated multifold growth in assets under management, expanding client base, enhancing product portfolio, and improving customer experience. Please join me in welcoming Mr. Vikas Sharma, Head Wealth Management and Private Banking at IDFC First Bank, to share his valuable perspective on this momentous occasion. Over to you.
Thank you, Shweta, for the kind words. Good afternoon, everyone. A big thank you to our esteemed distinguished guests from the media for joining us for this event. A lot of what this this research report has been covered by Anas. It's a celebration of the enterprising, the entrepreneurship spirit of the new age India, which excited us to partner with Hurun on this report. So we are very proud, to have partnered with this theme. The journey of, to identify what is it, what work do we do with Hurun together started about almost a year back. Anas, when we first met him, he shared a few ideas with us in terms of what we can work together on. And we deliberated a lot of ideas. We went through, a lot of themes, a lot of suggestions that came from Anas. But we were very keen on, partnering on something that we felt resonated, very well with what we do here at IDFC First Bank, the spirit of how IDFC First Bank was formed, the spirit of how it is run, and also the spirit of new age entrepreneurship in India. right? And when Anas came up with this suggestion of self-made entrepreneurs of this millennia, I think we jumped, me and TV, our chief marketing officer, we both jumped to that idea, saying that yes, this is something that we'd love to partner on, and this is an idea which immediately resonated with all three themes which I mentioned, right? The new age enterprising India, the story of IDFC First Bank itself, and what we are trying to do here at IDFC First Private Banking, the first private business, right? And we're glad that we partnered, and it took a lot of effort. Big thank you to Anas and team for coming up with this. The way the report is shaped out, is phenomenal. I went through it. The kind of insights, when you talk about the new age enterprise, evolution in India, this whole startup ecosystem which we keep talking about. But when you read the report, you realize the length and breadth of how this ecosystem has shaped up, right? So we are very glad we partnered. In hindsight, when we look back, we're very proud of the decision that we could come up with something like this. So thank you, Anas and team, for putting this together. It is an exciting time to be in India, right? Even more exciting time to be an Indian, whether in India or anywhere else in the world. Why? Because all of the world is looking at India, right? Everybody's talking about India. I recently read a report, but by one of the big fours, which said that India, the last 2 to 3 years has been a very, very isolated market when it comes to the opportunities and the growth, right? We are amongst, clearly everybody knows that, we are amongst the fastest growing economies in the world. If you look at our capital market, our equity market specifically, it's been an outlier, right? 2021, Indian equity market was an outlier as compared to rest of the world. The foreign inflows, the foreign investments in India are constantly on the rise relative to rest of the world. So, the kind of tailwinds that we are seeing today, okay, India has always been a fast growing economy, like many other emerging markets. But what we are seeing today is very different, right? It is something that we've not experienced as an economy before. Practically, everything possible from a tailwind perspective is right behind us. And to be able to kind of part of this ecosystem at this point in time is a privilege in itself. So that's why I said it's a great time to be in India. It's a great time to be an Indian, right? And that is the opportunity, the wealth creation opportunity, the growth opportunity that this report basically represents, right? For us, he mentioned Mr. Vaidyanathan. Yes, when he was putting together the report and he came up with that suggestion, we realized that that spirit of new age entrepreneurship is right here with us in house. When Mr. Vaidyanathan, our MD CEO, quit his corporate job many years back, started the NBFC Capital First, and then went on to merge it with the erstwhile IDFC Bank to form the current entity IDFC First Bank, right? So that itself is a story, very, very inspiring story of entrepreneurship on how a large, financial institution was created. And that's why I say that, that's the whole spirit of creating an enterprise like this and running it, like a new age business, new age enterprise is something that we felt resonated very well with us and what's happening in the country, and that's how this report came to fructify. IDFC First Bank is very, very proud and looking forward to kind of partner with its customers, with its private banking customers to help them navigate through this whole growth opportunity that we are talking about, this whole wealth creation opportunity that we are talking about, right? At IDFC First Private Banking, the first private business, we are looking at the whole endeavor of this business is to kind of provide an exceptional experience to our private banking clients, right? And the way this business is run, again, resonates very well with the self-made entrepreneurs of this millennia theme, right? Because there have been very many large organizations, mammoth institutions that have contributed to the nation building. But we believe that if you have to look ahead, look forward, okay, the next decade or the next couple of decades, then it is the spirit of new age entrepreneurship, these new enterprises that will shape the future of the country, that will shape the future of the economy, right? And similarly at IDFC First Private Banking, our endeavor is also to reimagine the wealth management business, right? Because let's say what we've done in the last 20 years, what anybody's done in the last 20 years may be required to be thought very differently for the next 20 years, right? So reimagining, and that's happening across all spectrums, all businesses, all industries, and we thought it's very relevant for us to reimagine the whole wealth management business at IDFC First Private Banking, and that's the endeavor that we are running this business. Just to throw the size of this opportunity, right? Just to quantify, what are we talking here when we talk about, what is the wealth creation opportunity? What is the growth opportunity that we are talking about? Well, we keep reading a lot about it, but just to quantify, put some numbers around it. 2022, there were about 7.9 lakh, HNIs in India. HNIs is millionaires, basically. So the loosely defined definition is, individuals, families holding 1 million and above of net worth, right? That number was 7.9 lakh by the end of 2022, right? A lot of the research reports show that this number is expected to more than double over the next 4 to 5 years, right? So imagine 5 years from now is 2027, 2028. And if we were to more than double, I read a report recently which said that we will have close to about 17 lakh HNIs, millionaires in India, dollar millionaires in India by that time, The size of the growth of the opportunity can just be imagined by that we'll have more than 1.5 million millionaires in India, right? Which 10 years back was a few, handful, a couple of lakh millionaires, which is multiplied in the period of those 10 years, multiplied by about 7 to 8 times, right? That's the opportunity we are talking about. And we have to, as a financial institution, as a wealth management business, we have to keep pace with these the growing need of new age, entrepreneurs, new age millionaires, right? And that is the whole reimagination of wealth management that I was talking about, right? So it's a great opportunity. We really look forward to it. IDFC First Bank looks forward to it. IDFC First Private looks forward to this opportunity to work with our clients, to help them kind of, in whatever way we can, to help them and partner with them in this whole growth opportunity, right? Lastly, I would like to thank all the 405 entrepreneurs, those 200 enterprises that they've formed, like the organizations that have been created in the past, which have become mammoth, giant institutions. My view is that some of these institutions to go on and become those mammoth, giant institutions going forward in the near future. And we would like to thank them on behalf of IDFC. I'd like to thank them for their contribution towards nation building, for their contribution towards the kind of growth that we've seen, and our best wishes with them for the future, because like I mentioned, this is where the real growth and the wealth creation opportunity will come from. A big thank you to them, and a big thank you to all of you for joining us, for this celebration today. Thank you.
Thank you, Vikas. Ladies and gentlemen, IDFC First Private Banking and Hurun India have joined hands to present, like both the gentlemen mentioned, a comprehensive overview of India's entrepreneurial prowess. This release reflects the undeniable impact that these entrepreneurs have had on our nation's economic fabric. Here's presenting you with the list of remarkable individuals of this millennia who have shaped the entrepreneurial landscape of the country. Can we have the launch video played, please? Officially launch this list, may I now invite both the gentlemen of the hour, Mr. Vikas and Mr. Anas, to kindly come on stage and unveil the cover of this year's report, please. The revelations within this list offer very profound inputs and takeaways into the driving forces behind India's entrepreneurial success. To discuss this list a little bit more in depth and some of its key findings, we now have Mr. Vikas Sharma and Mr. Anas Rahman Junaid. As they come on stage for this fireside chat, a quick reminder to each of you to make note of all your queries, as we will have a Q&A session at the end, and we can take, I'm sure the speakers will be more than happy to take all the questions that you may have. Over to you, gentlemen.
Thank you, Shobhita. Thank you, because I think I want to ask you probably one question, and then I'll give it to the audience for any further, and then we can go back and forth. I think one interesting trend is about women wealth creation, right? If you look at any other list by anyone, right, in us or anyone, right? If you look at the women contributors to the overall list, it's not much. But when you do a cut of those super valuable companies founded after the year 2000, and then look at how many of them have started business on their own, I mean, the data is quite exciting in terms of women entrepreneurship. I really would like to understand, as an expert in wealth, IDFC First Private Bank, right? I would like to know, how have you seen that transformation in terms of women wealth creators and so on? And I would love to know more about that first.
Yeah, sure, Anas. So, not just wealth creation, right? I mean, you mentioned that, you know, if you see historically, you didn't see, you know, women participation in things like this. But in this millennia, post 2000, that has changed. So it's not just wealth creation, but I think socially also, you know, women participation, women empowerment, you know, across the spectrum has really been revolutionary, right? And that has translated into, the trickle effect of that has obviously come into, you know, women in businesses and creating enterprises, and, you know, you see a very healthy proportion of, you know, people on our list are women. So yeah, I mean, it is also representative of the fact that the new age India is very different from the pre-millennium India. So the contribution of women across the board, not just in businesses, you know, has been immense. And we are very proud that we've associated with, you know, with this finding where the women contribution is immense. In fact, in my you know, personal interactions, when we meet our private banking clients, I'm also very, you know, pleasantly surprised when I see a lot of women participate in the most serious, the most relevant financial decisions, of the enterprises, all of the family offices where we engage with our clients. So yeah, I mean, it is very, very apparent that their contribution is on the rise, and we're very proud that that is the case.
I just have one follow-on question. So this is a very unique breed of entrepreneurs. Young, I mean, mostly young. The companies are founded after the year 2000. So you would have seen a mix of, men entrepreneurs and women entrepreneurs or wealth creators. You would have seen that. How is the conversation? How different are the conversations? Do you have any inputs on that?
Not very different, honestly speaking. Not very different. In fact, I would say, since there is a very recent interaction I had with one of our clients who happens to be a very leading businesswoman, and I think the conversations, from a gender perspective, there's barely anything to differentiate from the fact that they are successful, the fact that they have, whether they're in corporate life or in their businesses, they're already successful. They know, like I always say, people who've built wealth know, the best way to kind of deal with wealth, right? We can just be enablers as private bankers and wealth managers, right? But so my experience has not been different. They've far more evolved. I mean, data today, 20 years back, more than 20 years back when I started my career, when we would meet clients, they would not have enough data for themselves to validate what is being told to them. But today there's so much of data, so much of research available. So I think our clients are far more informed. Our women clients are no different. I think they're very, very well informed. So I don't see absolutely any difference there at all.
I can take any questions now before I go to my next question. I think if you have any questions. Anyone? I think there's a question. Can I have a mic there?
Yeah, could you tell us about the profitability of these companies? What kind of stress tests did you undertake to shortlist this 200 companies? What kind of debt are these companies having on their books, and how are they servicing this debt?
I'm not sure if I've done the analysis on debt. This list is basically based on the valuation of the enterprises. That's been the underlying yardstick. But then if while doing the research, if we find that certain companies we feel that may not be valued enough based on the data that's available, we've taken them out of the list. Some of the names in startup world you may not see in the list because of those conscious calls. But we haven't really done an in-depth analysis of debt. It's basically based on the valuation of the enterprise. That's what we looked at.
Hi, just one clarification, because the list comprises founders of listed and unlisted entities. So for the listed entities, have you taken the complete market cap of the company or just the value of the founders holding?
The market cap. It's a value. We have to do an apples to apple comparison. So we've taken the private enterprise also the full value. So the listed also we've taken the full market cap.
But in that, wouldn't that slightly disturb the balance? Because in the case of listed entities, say for instance, Mr. Damani who has topped the list,
yeah,
his stake, say for instance, is just say 15 or 20%, just giving a random number.
Correct.
But the number that will be here, it's 2.38 lakh crore.
Correct. So I think the intention of the list is to try and come with the story that these are some of the founders who've gone on to find these business who've eventually become valuable. That's the objective of the list. Even if you look at the startups, to be honest, right? The founders were featured on the list. If you ask me the value of the company versus how much they actually own, that'll also be proportionally lower. The objective of it's not a rich list per se. It's more of trying to showcase that, hey, these are the kind of companies that's been founded after the year 2000. And these are the founders who have founded. And what are the sort of interesting trends that you see over the last, if you look at this specific set of data. That is what we've been trying to understand through this list.
Okay, just one more question. How easy or difficult it is to get the number from these startup guys? Do you go by the numbers that they give, or did you have your own methodology? Because many times we keep hearing or reading these reports on the kind of valuation numbers they have.
Yeah.
But when the same guys come to the public markets, the numbers that they get is quite different from the private markets.
Yeah, one interesting aspect that's happened over the last couple of years, blame it on funding winter and so on, is that it's of course affected some bit of public markets, but then mainly the investors into these startup companies, they've all started taking active positions on marking down the valuation of the startups as they deem fit, right? So we've taken that feedback into consideration wherever we could. So we've done that. So as you said, startup ecosystem, if you ask in general, I mean, it's not really going through the best space because of lack of liquidity and so on. But I do always do a comparison between public markets. When markets are, for whatever reason, the stock market's not doing well, some of these listed companies won't do well. So similarly, startups are going through a similar phase with lack of liquidity and funding winter and so on. But we've taken into consideration the valuation markdowns by some of these investors. Question? I'll probably question. Okay, I'll go to the next question then we can.
Sure.
The next is basically on the overall economic landscape. What do you perceive as the impact of the featured self-made entrepreneurs in IDFC First Private, Hurun self-made entrepreneurs, the Millennia list, and their companies on the overall impact on the economic landscape of India? And what potential growth opportunities do you foresee in the startup ecosystem based on the findings? So that's kind of relevant to what he just asked.
Yeah. No, so like I also mentioned very briefly that, the reason, if you remember our conversations when we started, thinking about the idea that we could partner with, and we immediately jumped to this idea because it's a very forward-looking thought, and that is exactly what resonates with our business, our bank. If you look at, let's look at, S&P 500, the US market, US equity market index, and you look at every decade the top 50 organizations featuring in the S&P 500, or for that matter any large index, right? You would see every 2 to 3 decades, you will see a very, very serious 70 to 80% churn in some of those companies, which means larger organizations are, it's not that they stop growing, that they grow, but some of these new businesses, new age businesses grow faster and become much larger organizations. For example, you saw in the 90s and the early 2000s, some of these tech companies in the US, the Googles of the world, Amazon, got featured, got listed, and some of the traditional, businesses like financial services and manufacturing, which typically headline the US equity indices. These businesses were much larger than those businesses 20 years, 25 years down the line, right? So that was the whole thought that if you were to look at, we all keep talking about the 5 trillion economy. We're very close to the 4 trillion mark now. And why 5 trillion? We talk about 7 trillion, 10 trillion over, many years and many decades. If that were to happen, then these institutes, some of these institutes that you see in the list here today, formed by first generation self-made entrepreneurs, will be the ones that will go on to kind of, become the largest organizations of the future, create job opportunities, and drive the whole economic engine, right? And that is the reason we really feel very, very closely associated with this thing.
US, as you rightly said, the top companies in the global rich list as well, right? It's Tesla, or if you look at the value in itself, it's Tesla, Apple, Facebook, Microsoft. So it's all possibly what we are in India, possibly what US was when these companies were being built.
Yes.
So in 10, 20 years, maybe you would see some of these companies headlining.
Absolutely.
10, yeah. So I'll ask the next question before we again open the audience. And also one interesting thing that's come while we're doing research was significant amount of these entrepreneurs or these companies have expanded globally, right? So that's actually quite exciting. If we had done a list like this possibly 20 years back, most of these entrants would not even exist that we have today, right? And the very fact that we could all expand globally also kind of speaks volumes of how Indians are spreading across. Indian diaspora is getting stronger, how are we getting access to these markets, how are we building superiorly high quality products and so on. So I really want to understand, how do you believe that this international presence and global expansion impact wealth management strategies for these entrepreneurs? And what opportunities and challenges does it present in terms of wealth creation and preservation? One more question to add here is that, as you rightly said, one of the tough problems that the entrepreneurs face is you created so many wealth. Now you don't have time to look at protecting the wealth. I think you play a very important role in that ecosystem. So I'd like to add.
You mentioned, the research mentioned that 38% of these companies featured here have some global presence and global businesses. So yeah, you're right. I mean, a lot of these companies are technologically led, right? Digitally led. See, they thrive on digital ecosystem, and we all know that. We all like to believe that the India stack, the India technology digital ecosystem is amongst the best in the world, if not the best, right? We are when it comes to payments. Even we were just talking to somebody before they even started that when it comes to payments, digital payments ecosystem, we are probably even better than some of the developed markets, right? All thanks to the India stack that we've managed to build, right? So we have leadership position there, we have the pole position there, and leveraging that India stack, India tech stack, I think for some of these enterprises to have global presence, we wouldn't be surprised. So this 38 could probably be 60, 70% going forward, right? You also spoke about wealth management, because a lot of these companies will expand globally and will have a global presence. Like I also mentioned earlier, that wealth management needs to be reimagined, right? And like how these businesses that we are talking about here are breaking the traditional approach of how businesses were done, how scale up of businesses happened. They're using technology, they're using digital capabilities to do that. Similarly for wealth management as well, I think it needs to be reimagined. While we've probably done a reasonably all right job in terms of providing wealth management solutions in this country, but going forward, if you have to really keep up with the needs, requirements of these millionaires and ultra HNIs that I just spoke about, then we need to reimagine. We need to kind of think digital. The scale up can't happen in the same manner that it happened in the last 20 years. So you have to start thinking, providing these solutions, digitally, which is something that we are working very, very actively on. I'm sure everybody is aware that we are a digital first kind of a financial organization. So that is one. So one is obviously digitally led innovation would help us kind of take the pole position there. Secondly, solutions. Solutions have to be. So, for example, it's a certain HNI needs like estate planning. Family office services. There are certain things that probably in India are very, very nascent, very, very new. But if you look at some of the more evolved markets, these are things that happened there many decades ago, right? So solutions, innovative solutions around that, which probably the new age self-made entrepreneurs would be expecting their wealth managers, their private bankers to provide them with. So that is something that we really, really thinking through. From a going forward perspective. Yeah. So solutions that, new age solutions and a digital mindset to lead those new age solutions. I think these two things combined together will probably gear us up for the needs and requirements of these new age millionaires and billionaires.
Just one question I had. So what are the characteristics of these entrepreneurs? Are they very focused and passionate about the idea that they work on? sometimes is it difficult to make them think that you should be a little bit risk averse and look at other opportunities?
No, so like I said, I always believe this. While you may call us the experts on wealth management and some of these things, but I believe that people who've created wealth, the innovators, the entrepreneurs, the risk takers, right? I mean, starting an enterprise, can there be any bigger risk than that, right? So some of these guys are there where they are because they've taken some serious risk, more risk than we can probably envisage, right? So to go and talk to them about risk management, is probably teaching them their own lesson. But yeah, when it comes to solutioning, our job is to be the enablers there. Our job as wealth managers and private bankers is to be the enablers and redirect and kind of help them, make them data accessible. Basically, bring data to them, show them, what are the right things to do, how do we go about. So our job over here is to simplify these things. Like you said, they are all, this is not the priority for them. The business is our priority. So you need to simplify things. You need to kind of de-jargonize, provide them relevant data, get them access to the latest technology. If you do all of these things, I think, that the trust factor comes in play, and you're able to kind of work together in partner.
Any other questions?
This is the value on as of September 30, right?
Yeah.
All of the companies listed, unlisted that way, and it takes into account the markdowns or markups by private investors as well.
Correct.
So, just like you're going by a particular date, but suppose if we were to look at it from a 2-year, 3-year sort of a perspective, I'm sure there would be a lot of what we can say volatility in the valuations of these companies. So how risky is it to assess these companies by the value for a researcher like you, given the fact that, okay, sometimes there is exuberance in the private markets and valuations go up, or at other times merchant bankers hard sell an issue which has a sort of a which has a not so good debut on the capital markets. So how risky is the entire thing to assess these guys by value?
Yeah, thank you, Ash. Great question. I think when we put out any list, including this list, for us it's more like taking a photograph for that year, right? And you take a photograph in the first year, take the photo next year, like that. You do it across the years. Then you would be able to really see the story of Indian economy through the eyes of these entrepreneurs and how their value or wealth has changed over the years. That's the objective. So it happens, sometimes the market's done well. Now we have liquidity, inflation-linked liquidity problem into capital startups, and that has an impact on the startup valuation. And this euphoria or the valuation will pick up again in a couple of years, is what I expect, because once the liquidity comes back to the market, the moment the US reduces inflation by a few points, that's going to happen, right? It's just a matter of how many years it's going to be, 1 year or 2 years. It is definitely going to happen. But what is really interesting in this time frame, like you said, sometimes the private market's not done well in startup exit and so on, is that the valuation fundamentals or the fundamentals using which a company is being assessed, that also gets changed. So you'll have a more sustainable foundation framework which gets built over the years. And actually it's quite exciting too. There has been times when people have written off Facebook completely and stock markets share prices have tanked, and how they've come back, right? So when we let's say we do a first year on Facebook, it's not done well, and after 2 years it's come back, it's again a story. How did that happen, right? So what we could do as researchers, from my perspective, is to objectively look at data that we think is right based on facts. Then try to understand the underlying theme based on these numbers, and over the 5 years see what has happened: big jump, small jump, sine wave, square wave. Just try to understand how that get transformed over the years. So I think it becomes even more relevant if we have a long-term thought process and not have a 1 year thought process. Do you want to add anything?
Yeah, so I'm very tempted to actually chip in here. So I'll take an example of calendar year 2022. Okay, a very unique situation. I just mentioned one report by one of the big fours, which mentioned that India has been an isolated case last 2 to 3 years from a growth perspective, right? Growth and capital market perspective. 2022, when the interest rates across the globe, including the US interest rate, started to shore up, started to go up, and everybody thought by end of 2022 it's peaking out, was one unique year which you don't see when you go back and look at data. All the years where you see central banks raising rate, you will see monies typically moving out of the markets and going into, moving into safe havens, because they're able to get better rates for safe haven products like US Treasury and gold and things like that, right? But while there was, like he mentioned, funding winter in the startup ecosystem, but if you look at the primary, secondary markets and the inflows in primary, secondary markets in 2022, if you pick the calendar year 2022 data, it was a very, very dramatic, increase in FII investments in India, parallelly where the US rates were going up. These two phenomena typically don't happen in parallel. It happened in 2022, and which made a lot of people globally say that India is a very isolated case of, so I mean, basically they meant to say that they didn't have an answer to what was happening, right? So that gives a lot of confidence, in the funding winter changing to, what do you call it, summer? If it's, autumn, spring, summer, whatever. To a spring or summer very soon, faster than the rest of the world, given that what happened in calendar year 2022. So that.
Any other questions? Please.
Hello. Vikashji, here.
Yeah.
You mentioned about new requirement of new age millennia. So can you just throw some light on this? What are these new age requirements? How in the last maybe decade or so, you mentioned that you have been in this business for almost 20 years or so. How these requirements have changed over the years?
Yeah, so I'll take one, because it can be a very long list and a very long conversation. I'll probably give, let's say, one small example, right? The large, wealthy, ultra HNI families typically have, do legacy and, transfer of wealth planning through trusts largely, right? And that is how typically the transfer of wealth typically happens. All, large family houses will have their trusts, and, through which, the wealth typically gets passed on from one generation to another, and so on and so forth, right? So that is something that, is, and if you see the large number of family offices that are coming up, in the landscape, thanks to the wealth creation that has happened and, is likely to be expected to happen. So that is one piece which needs to be really thought through in terms of how that can be. So today that is something, it's a very exclusive thing, right? Very few, and at least in our heads, people think that it's a very exclusive thing where, very large, families with 500,000 crores of plus kind of wealth only, look at those kind of solutions, which is changing dramatically. Today we meet customers whose net worth is, let's say, 25, 50 crores also, have started to think on those lines, because for them the value of the 25 crores is, from a relevance perspective, as relevant what a multi-billionaire would value his wealth at, right? So this solution orientation is changing, the mindset is changing, the adaptation to some of these earlier which were thought as very niche, very complicated ideas and solutions is now being adopted at, by these new age millionaires. So that, this is one example. So, we can go on and on, we can have maybe a conversation post that, but that is one example that I'm seeing, and we need to be abreast with, solutions like these, right? I mean, it can't be just a product. When you meet wealthy clients, it's no longer just about a product that you have to offer them. No longer that. If anybody is doing that, I don't think they can be in business for very long. It has to be solution oriented. It has to be value adding to them. So that is one transition change that I'm seeing, and hopefully we are recognizing that change. We are spotting that trend early and reacting to it with our customers at least.
Thank you very much.
Any other questions?
If you could discuss how did you arrive at equity value for Zerodha and Dream 11? Zerodha is valued less compared to Dream 11. So what was the criteria you chose to value these two companies?
Yeah, I think the Dream 11 is a funded startup. So we basically have the database on investment filings and so on. But then something like Zerodha, it's a private company, bootstrapped. So we look at latest available revenue profitability. We look at transaction comparables. Then we apply a discount and arrive at the valuation. That's the. I mean, is there any, if it's specific, I can talk to you privately.
Valuation, any multiple of
revenue stream? Yeah, multiple. Because Zerodha is the numbers there, so you could look at multiples. You could look at revenue, profitability. We can do all these multiples. Yeah. So and then we take, depending on where the margins are, where we think is right, we apply a discount because it's private business. So it's like that. I can have a detailed chat with you maybe after the.
Some standard methodology used for bootstrap companies.
Yeah, bootstrap. I can have a chat with you detail about it. Yeah. Basically, pricing multiples. We can speak more after this. Yeah. Any other questions? Okay. Thank you very much, Vikas. Thanks, all of you. Love to catch up with you after this.
Thank you. Thank you so much. Thanks a lot.
Thank you, gentlemen, for providing us such valuable insights. Please be informed that our speakers are available even post this meeting during the course of lunch for interactions, interviews, and anything else you want to speak to them about. Please know there's lunch being served outside. Do not leave without joining us for lunch. And thank you so much for joining us today and being part of this momentous occasion. We truly, truly look forward to your covers on the story of India's top 200 self-made entrepreneurs of the millennia. Have a good evening. Thank you.
Thank you so much.
If you like the video, do like, comment, share and subscribe.